Good afternoon, everyone. So as a marketer, I can't imagine a world without technology that's been designed specifically for me in the marketing function. If you look at Scott Brinker's MarTech landscape, there's over 8,000 technologies that are available to me as a marketer. How do I choose? But I can use all those technologies to help me understand the customer better and respond to consumer behaviour that's changing at such a rapid pace in the last 18 months. That's great for me as a marketer. But what if I sit in the compliance function or the risk function? Then it's a very different story. If you were in the risk or compliance function, digital transformation felt like it was years away. Then boom, along came COVID. So the first wave of RegTech, or regulatory technology, was all about getting access, digitising access to the old world or the physical documents and the data sets, things like passports, things like business registers, government PEPs and sanctions lists. It enabled compliance people to onboard new customers and to manage risk and compliance throughout the process. But the primary aim of that technology was to satisfy regulators. It wasn't to digitise the compliance function. COVID has changed all of that. So since the pandemic hit, we've gone from 15% working remotely to more like 50%. I don't know about you, but I've been working from home since March 2020, and it felt mighty strange, I can tell you, getting on a train and a tube this morning and coming into central London. I don't think I've been physically at an event for about 18 months now. And that trend is set to continue. I know at Passfort, we're going remote first, and I'm sure for you it's the same picture. We've become internet citizens, online consumers, remote employees, and a digital world needs a digital identity. But corporations must be sure that the person they're onboarding is who they say they are. And this is because criminals have really capitalised on the disruption caused by the pandemic. So they're finding increasingly novel and sophisticated ways to commit fraud and financial crime and launder money. 3 in 5 businesses have experienced increased fraud over the past year. By August 2020, there were over 1,300 new pieces of legislation introduced, regulation, due to COVID, and there's been many more since. So, how are we going to cope with this? And if you're sitting in the compliance function, as I said, the technology was designed to help you automate processes. It wasn't designed for the digital world. And what about customers? What about their expectations in the digital world? We want everything to be fast. We want a fantastic customer experience, don't we? And this is where most financial services companies are letting down their customers. According to Sales Cycle, 75% of applications for financial products are abandoned before completion. That's not a great customer experience, is it? And 88% of consumers want more control over their data. So is it time for a new approach? Let's look at some competing forces, local versus global. So the digital economy is global, but the focus in the last year has been very much on local. So political things like Brexit has taken a lot of attention. COVID, it's a global crisis, isn't it? But the response to it has been very local. There's also been new regulations like the new Corporate Governance Act in the US. So we have to balance that with a global digital economy that doesn't respect borders. So you've got an increase in cryptocurrencies, more forex trading, physical assets trading. So is it time for a new approach to digital identity? How about if we take a risk-based approach rather than a rules-based approach? And this is where we need balance, because rules can be very restrictive. they're not very good at dealing with real people like you and I. So they're not good at dealing with complexity, and as human beings, we're very complex, aren't we? We do really strange things like move house. We change jobs. Some of us change identity. We get married, we change our names sometimes. So taking a rules-based approach can be too rigid, and it can lead to compromise. Or even worse, it can lead to unconscious bias. We heard a figure earlier, didn't we, saying that 1 billion people in the world are excluded because they don't have a digital identity. So they're excluded from access to financial products. I actually got a stat from McKinsey that said it was 3.4 billion people who've got some form of identity that is not going to work in the digital world. So what if we take a risk-based approach? Because this balances the need for local regulations and the need for compliance with those regulations and the expectations of customers in a digital world. So what do we mean by a risk-based approach? So it will be bespoke to each fintech. So while the regulators haven't been prescriptive about the type of risk model that you need to use, there are certain parameters or factors that you need to consider in your risk model, because each company will be different. So it depends on, are you onboarding individuals or institutions? So you need KYC or KYB. What products are you introducing? Or business lines? Where are you going to sell those products? Which countries are you going to operate in? Under which jurisdictions? What's your risk appetite? All of these things need to be considered. Let's take an example. Now, this is where you have a bit of audience participation. What do these people have in common? Is anyone going to be brave enough to hazard a guess? This is quite hard, so I'm going to make it a little bit easier for you. Anyone know now? Oh, you haven't drunk enough coffee. So the people in the top row, sorry, what did you say? They look like white. Well, in the top row, they've all got the surname Trump. And apparently there's 5,000 people in the US with the surname Trump. And the people on the second row are actually called Donald Trump. What do you think happens when these people apply for a credit card? The PEPs and sanction algorithm kicks in, and the computer says no. Let's take another example. We've got a Syrian passport. Now, under a rules-based approach, the computer might say, no, Syria's a high-risk country. We're going to say no to them. But under a risk-based approach, it's going to ask some more questions. It's going to bring a human in who's perhaps going to find out a bit more information. And then we discover that, yes, that person has a Syrian passport, but they've been living in the UK, in Surrey, for the last 10 years. And then the answer might be different. So what a risk-based approach does, it helps you make better decisions. So if we look at this, it deals in the subtlety and complexity that comes with dealing with real people. So in this example, if your name is Trump or Donald Trump, or you have a Syrian passport, the computer might say no. It's probably most likely to say no. But if you've got a risk-based approach, you can bring a human into the process to either ask some additional questions, consider it, make some judgment, and then the answer might be yes. And the most important thing is that you have flexibility in the process. You need to be able to bring humans in and out of the process where it makes most sense, where you need some critical thinking, where you need a bit of analysis or a judgment. Because ultimately, you want to make those better decisions. So a risk-based approach can help you trigger additional profiling, so you can build like a progressive profile of your customer. You're not just making one decision based on a rule. And imagine if you're sitting in the compliance function. That's quite a lot of responsibility, isn't it? If you're making decisions about whether to say yes or no to somebody or to a company. So with a risk-based approach, you've got an audit trail. You can prove why you've made decisions, and you can make the best of your compliance people. It can also help you avoid that unconscious bias. And ultimately, you're going to deliver a much better customer experience, because if you've got that risk model working in the background, you're going to have a lot less friction in the process. Because the key thing is this is an ongoing process. Again, people are complex, they change all the time, and we need to have that flexibility to change constantly. And this is where RegTech can really help us to get that scale. So regulatory technology, according to a risk-based model, can help us get through those low-risk applications really quickly, and that will help us scale in the global economy. So you can just bring in the people where they're going to add the most value, where you've got to review a medium or a high-risk case. So let the automation and the technology take the burden. Let you do your straight-through processing with your low-risk applications, and just bring in your people where you've got the medium or the high risk. And this is what this constant changing process is known as perpetual KYC, because it's not something that you can just set and forget. It's constantly changing. So skilled people will always be essential in the process. The machines are not going to take over the world here. They're just going to take over the tasks that can and should be automated. Things like data collection, data entry, automatic profiling, forms to ask more questions. But the weight of the compliance activity, the burden of compliance activity, should fall on the technology and automation and on the workflow engine. It shouldn't fall on the compliance people, or worse still, on the customer. So you can let your compliance people focus on the tasks where they will add most value into the process, and they're going to create much better experiences for the customer. So less waiting, fewer touch points, less friction. And you're going to get faster engagement for your customer with your financial products, who want to onboard your products. They don't want to interact with your KYC process. So in summary, what are the benefits of a risk-based approach versus a rules-based approach? Think of my example with the Trumps and with the Syrian passport. You don't want the computer to automatically say no. You want a bit more subtlety and complexity in the process. You want to prevent unconscious bias and make decisions based on real people. You want to let the weight of compliance fall on the automation and on the risk engine, not on the compliance team, or worse still, on your customers. You want to be able to use regulatory technology to onboard at scale in a customer, in a global theatre. And the last one is, you don't have to compromise. If you use a SaaS RegTech vendor like Passfort, you don't have to compromise between compliance and customer experience. Our mission is to digitize the compliance function, to bring the same kind of benefits and transformation to the compliance function that we've experienced in marketing for a long time now with MarTech. So there doesn't have to be a compromise. You don't have to settle for a choice between regulatory compliance and customer experience. Don't ever settle for less. Thank you.